The world is accelerating into the digital economy, and are you ready? Well, we're here to help you stay ahead with the latest in Web3, crypto, and data. Welcome to Forkast IQ, where we look beyond just the headlines to get you the insights that will help power smarter decisions from all around the world. I'm Forkast's Editor-in-Chief Angie Lau, and it is great to be with you this week. Well, it's been a landmark week for cryptocurrencies in Hong Kong. China's Special Administrative Region greenlit guidelines on June 1st on Thursday, which potentially is the start of opening up the world of digital assets, yes, even to the retail market, the everyday customer. But to be very clear, the regulation is still restrictive and very specific on what you can and cannot do with crypto and stablecoins. Still, it's part of a path to recovery. Hong Kong has long been a leading financial hub, from fostering banking innovations to implementing necessary regulatory measures. And then the shine dulled for crypto. Only now we're beginning to see a glimmer back. So what brought us here? Forkast's Jenny Ortiz gets us the story.
$14.15, that's how much a Bitcoin cost in January 2013. And by November of that year, it was worth well over $1,000. Investors, especially those in China, became increasingly optimistic about the digital currency's potential. By December 2013, the city's Legislative Council was discussing Bitcoin and the risks posed by anonymity of digital currencies. The next month, a government statement said it appeared difficult for this kind of virtual commodity to become a commonly used medium of payment, or an e-currency. Despite that, in the same month, the city saw the launch of its first Bitcoin ATM, the second in the world. Fast forward to 2017, the rise of Bitcoin and Ethereum catapulted cryptocurrencies into the mainstream consciousness, creating an influx of local startups and crypto exchanges. The initial coin offering, or ICO, market was particularly vibrant in 2017 and early 2018. However, initial coin offerings waned during the crypto winter of 2018, but dozens of crypto exchanges, including some of the world's largest, were active in the city, including OKCoin, Huobi, and Lake BTC. Crypto exchanges like BitMEX and FTX found fertile ground in Hong Kong, leveraging both its advantageous geographical location and vibrant business environment. Interestingly, the recent class action suit by FTX customers against the company lists how being based in Hong Kong offered the firm a distinct advantage. This burgeoning growth forced the regulatory bodies to sit up and take notice. Hong Kong Securities and Futures Commission introduced a regulatory sandbox for crypto businesses to test new services and propose new rules. By November of that same year, the SFC introduced a set of guidelines stipulating that all cryptocurrency exchanges in Hong Kong need to be licensed, a move that was met with mixed reactions from the industry. Over the next few years, the government treaded carefully even as digital currencies took off globally, balancing the need to promote innovation while protecting investors. In December 2020, OSL Exchange became the first licensed virtual asset trading platform in the city. About a year later, a joint circular release by the Hong Kong Monetary Authority, or HKMA, and the SFC in January 2022 placed sales restrictions on non-derivative products such as crypto spot exchange-traded funds, or ETFs, including overseas products to be offered to professional investors only. By late 2022, a combination of Hong Kong's harsh COVID restrictions and weakening crypto demand led to some crypto exchanges moving out of the city in search of friendlier crypto destinations. Meanwhile, the collapse of Terra Luna, Three Arrows Capital, and FTX prompted Hong Kong regulators to move full steam ahead on developing crypto regulations. Public consultation on the proposed crypto licensing regime kicked off in February 2023. And on June 1st, 2023, Hong Kong's new rules for the cryptocurrency industry came into effect, under which virtual asset trading platforms must apply for a license to operate in the city. To date, only two crypto exchanges, OSL and Hashcape, have licensed to operate a virtual asset trading platform in the city. But things are about to change. Jenny Ortiz, Forkast.
And change they have. The guidelines that will govern licensed virtual asset trading platforms, aka crypto exchanges, are now effective. So what do they mean? And how will they change the crypto landscape in Hong Kong? And what does it actually mean internationally as well? A lot of eyes paying attention around the world to this one. Well, let's find out from the people who are in the thick of the action. Angelina Kwan, CEO of Stratford Finance, who was a key member of both the Hong Kong Exchange as well as the SFC in the past, along with some big crypto exchanges, joins in. As does Gary Tu from OSL, one of the only 2 licensed virtual asset companies in Hong Kong. So let's start with Angelina. In sharp contrast to some of its regional neighbors whose governments appear to be clamping down, Singapore, Hong Kong is setting in place a system so that virtual assets or crypto businesses can operate in a licensed and orderly fashion. And broadly speaking, would you say the government appears to be putting in specific guardrails for customer safety while giving virtual assets businesses room to innovate? A lot of people paying attention.
They put up a very good set of rules. The market commented, and now they've come back with tempered and I think very good decisions in terms of what the next phase of digital assets are going to be. And it's going to be a very coordinated, it's very clear, there's licensing. I wouldn't call them specific guardrails. I would say this is a regime going forward that's going to be great because it's very clear who does what protections investors get, and how do we innovate and move forward for digital assets.
That's a good point. Gary, you are one of only 2 licensed digital assets trading platforms in Hong Kong. We're talking about OSL here. And the city has now officially opened up the doors to crypto trading for regulated players. What's your take? How do you see this big regulatory move impact the crypto industry in the city and globally?
So this is a very big moment, a big milestone for Hong Kong, not just for the industry, but also for investors. Retail investors have been looking at the industry, looking at the regulated industry from the outside, but not being able to participate for the last 2 years. So now all the protections that Hong Kong has built in, including client asset protection, capital requirements, insurance requirements, cybersecurity controls, all of these things are now going to become available to retail investors.
Okay, I want to ask you this. Retail customers are going to be allowed to trade cryptocurrencies, which are large, highly liquid, but the burden to ensure customers understand the risks involved in crypto trading does rest on the exchanges themselves. Angelina, how practical is this requirement? How does it compare to the burden that's placed on exchanges that deal with traditional financial products? I mean, is this like for like here?
These licensed exchanges, they're going to have to offer account opening that they make sure that their investors or their clients have done the homework in terms of knowing what they're getting into. What are the products? So if you look at some of the virtual assets exchanges, they're very good at explaining each product. So now they'll probably have to do more about talking about risk. They'll have to do, hey, you can lose everything. You know that. That type of warning, which was there before, but it's going to be even more obvious, especially if retail is allowed.
I want to bring Gary back in. The new VASP guidelines have also included requirements in Hong Kong on anti-money laundering and countering financing of terrorism, also known as AML-CFT. What's your reading of them?
You know, as an existing licensee in Hong Kong, in the regulated space, we are already required to comply with the strictest AML controls that are equally applicable. And to a large extent, AML controls applying to the regulated digital asset industry is pretty much going to be the norm going forward anyway. And even in other markets where regulation may still be an evolving picture, typically AML is the first step. in the first step in the regulatory ladder. And but I think what sets the Hong Kong regime will actually across the board apply capital requirements, client asset segregation requirements, all the good investor protections, so that effectively we have as much as possible an equal playing field in the Hong Kong market.
That's a good point. Angelina, interestingly here, I want to talk about this, the approved tokens that retail investors can invest in also need to undergo stringent due diligence process, including a year-long track record and being included in 2 acceptable indices, minimizing the chances of fly-by-night operators taking advantage of gullible investors, you could say. We've seen cases of token listings, bribes in South Korea recently. And what does it say about how Hong Kong regulators are thinking and keeping up on all that's happening and closing up any potential loopholes here?
What the requirement of what was in the consultation paper before and will now be a requirement is you as management need to know and do the due diligence on Bitcoin. You need to know that it's not a scam that you're going to be offering to your people, to your clients. So that's the requirement. That was written in almost, 6 months ago. And maybe, I don't know, if this were in place, maybe Sam wouldn't have sold the FTT token because we would have known what was behind it. And we would have known, gee, there was nothing behind it. And you know the rest of the story now, but I mean, a lot of that due diligence needed to be there by all the exchanges and even us as investors.
Got it. Gary, over to you here. With this new regime, crypto companies are definitely looking at Hong Kong. Is OSL ready for more competition?
We're always ready for more competition. We think that's healthy for the space. It's healthy for innovation. And it's going to be a good thing for investors as well to have more to choose from. We have been positioning ourselves for the last few years, not just as a direct B2C operator, but also we do support a lot of other peers through our B2B capabilities, whether through tech servicing or also through, for example, through our omnibus structure, where other licensed intermediaries can actually use us as a background support for them to service their own B2C clients. So we definitely welcome more players in the space.
Angelina, SFC has also said that stablecoins are a no-go for retail trading till regulations for this specific type of crypto assets are finalized. Do you think Hong Kong's development of a state CBDC, aka the e-Hong Kong dollar, possibly has something to do with the requirement?
The HKMA is in the process. They've already said this, that they're going to draft an entire regime of how stablecoins should work. How should they be backed? Is it $1 for one USDT, USDC, and so on and so forth? And there have been a number of stablecoin issuers very interested in it. So the easy ones are $1 to one USDT. The ones that are not easy are the ones that you saw with Terra and Luna, who called themselves stablecoins. And it is that the SFC is most worried about. And because of it, everything else has gotten looped into it. So if it's a one-for-one like USDC, USDT, at least it's very easy to understand. Now, as this starts moving along, I think the SFC and the market will be talking to each other and saying, well, everybody pays using USDC and USDT. You have to allow these two to actually operate because that's the thing that pays for gas fees and so on and so forth. So I think it's a good step forward for Hong Kong to be the regulatory sandbox for China for digital assets.
It's a good point. And Gary, crypto hasn't had the best of times. I want to talk about this. Bitcoin dropped 7.5% in May, the first monthly loss so far this year. Cuts on ETH weren't as bad though. What do you think would be the impact on BTC and ETH with one of the biggest financial markets, Hong Kong, officially allowing trading? I mean, that's a lot of liquidity coming into the market potentially.
seeing more compliant operators, more compliant platforms is definitely good for the asset class as a whole. So I think Hong Kong opening to broader retail participation through compliant gateways is certainly a very important milestone for that trend.
Angelina and Gary, absolute pleasure to have you both on today. Really appreciate your expertise here and sharing some really candid insights there as well. Thanks. And on that note, all right, time for a quick break, but we will check in on the moves China is making in Web3 when we come back.
Forkast News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forkast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forkast has it covered. This is Forkast News.
All right, welcome back. We are still here, and thanks for staying on with Forkast IQ, where we get you intelligent on Web3. All right, so from Hong Kong, let's go just a little north to China's capital, Beijing. A couple of hours flight from Hong Kong, where officials released a white paper outlining the city's plans for Web3. So it's interesting to get a glimpse of the thinking here. On Saturday, the city's Science and Technology Commission said it faces challenges, including finding appropriate talent, ensuring the integrity of blockchains, and developing relevant laws and regulations. That's a goal. Now, according to the document, at least 30 provincial and municipal governments across China have rolled out guidelines or policies related to Web3 development as of April. Though it also notes that the Web3 sector is still in its infancy and has limited applications at present. Well, maybe by their definition. In a tweet, Binance CEO Changpeng Zhao, or CZ, said the release of the white paper is, quote, interesting timing, coming as it did just before Hong Kong released the new set of rules we just told you about in the last segment for cryptocurrency trading on June 1st this week. As you know, China is very hawkish when it comes to crypto, from trading it to mining it. As you may remember, crypto trading was banned on the Chinese mainland in September 2021. In fact, crypto-related activities was banned throughout. But the country appears potentially to be taking a different approach when it comes to non-crypto applications of blockchain technology. Let's dive into what this all means with Animoca Brand's co-founder and chairman, Yat Siu. Yat, it is great to have you, and thanks for joining us on Forkast IQ. All right, you have been in the region, you've seen it all around the world. Let's talk about China, though, our backyard. China banned crypto trading on the mainland, yet we're seeing different cities and provinces in the country working on their metaverse plans. What did you make of Beijing's recent Web3 white paper? What do you think of it?
I think there's a few positive things to take out of that. The first one is that Beijing absolutely recognizes the importance of Web3, right? So I think that's one thing. They talk about how it's, part of the future of the internet. Obviously, no particular emphasis on, specifically cryptocurrency, which is what I think a lot of people were sort of hoping for. But I think the reality is that we shouldn't be expecting China to be talking very actively about that, because I think that's the role of Hong Kong. So
do you think China's trying to do a non-crypto Web3 ecosystem on the mainland, while in Hong Kong, they would just allow crypto trading to happen? So that's interesting.
I wouldn't know if the term non-crypto is the correct term, because they're still going to use blockchain technology, right? So I think the term of crypto, though, has certain meaning, I think, which is why probably in China they don't want to use that term, because it'll be associated with things like Bitcoin and Ethereum. Because, at the end of the day, we all know that quite a few Chinese people own crypto. So there wants to be, probably from a Chinese perspective, a distinction that crypto is a certain kind of asset. But I think the other thing, of course, is that very similarly to what Hong Kong's role has been in the past as that financial intermediary, it's not like you can sort of freely trade and exchange other kinds of, currencies in China today, right? At the end of the day, will you be able to perhaps buy a Chinese kind of Bitcoin or a Chinese kind of Ethereum? I think it's possible, but it'll have to happen through a place like Hong Kong.
So is Hong Kong, in your opinion, the most advanced crypto-friendly jurisdiction across Asia? What's your assessment?
I would say at this point, they've really moved forward in an incredible way. Are they the most advanced? I think they're the most bullish, right? I think it's definitely an opportunity for Hong Kong, not just to become sort of the regional capital of Web3, which is kind of, maybe you could say, its original intention, but they have a real chance at being a global capital, because the US basically doesn't give any direction on where to go in this one.
Yeah, thanks for sharing your thoughts with us today. All right, we're going to take a quick break and then zero in on NFT markets. On the other side, you got to stay with us. You're watching Forkast IQ.
Forkast News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built, and Forkast has it covered. This is Forkast News.
So do you feel a little smarter? Yeah, we're trying to get you intelligent on Web3. Welcome back to Forkast IQ. We are not done yet. This is a very interesting market development here, and we're talking about NFTs. After a grueling bear market, the tide seemed to be shifting for NFT markets, and one can definitely see some green shoots with Bitcoin NFTs grabbing a lot of attention. We've got Forkast Labs data analyst Yehudah Petscher here with all that he's spotted in the world of NFTs this week. Yehudah?
Thank you, Angie. Let's take a look at what's happening in the NFT markets. Well, the NFT indexes may be flat, but don't let that fool you into thinking there's not plenty of news to talk about. The Forkast 500 NFT index is hovering right around even for the past week, and you'll see a similar story on ETH, Solana, and the Cardano indexes. But what's driving investors' trades this week? China Central Television, with its audience of over 1 billion viewers, broadcasted images of NFTs, including the world-famous CryptoPunks. With the potential of millions of new collectors and traders coming into the NFT space, some are buying high-end NFTs now, like CryptoPunks and Bored Ape Yacht Club and Azuki and CloneX, in anticipation of rising prices. But an increase of buyers doesn't automatically mean that they'll be buying from the Ethereum blockchain. With the recent action we've been seeing in the Bitcoin ecosystem, it's worth considering at least that potential new buyers and traders might prefer to explore the mostly unexplored Bitcoin blockchain. And speaking of Bitcoin, you may have heard it's off to a red-hot start since Bitcoin NFTs, called ordinals, were born in January. In fact, the 10 millionth Bitcoin ordinal was just minted this week. So if there were any doubters that Bitcoin would be a force to be reckoned with when it comes to NFTs, there should be little doubt left. Now, many are speculating about whether the Bitcoin NFT ecosystem can flip the Ethereum ecosystem, and we can turn to the Forkast NFT indexes over the next few months to see exactly how that plays out. Bitcoin's top NFT project this week is a new BRC20 token called OXBT that in just 1 week has become the most widely distributed blockchain collectible on Bitcoin. And separately, a new token standard was created this week on Bitcoin called the BRC 721E, which is going to allow NFT holders to bridge their Ethereum NFT over to the Bitcoin blockchain. In the process of bridging, the Ethereum NFT will be burned, and a new NFT is created on Bitcoin, and it will contain some data from the original asset. So we'll probably see some iconic NFTs like a Bored Ape and CryptoPunk be bridged to Bitcoin. Gaming NFTs are incredibly hot, and they seem primed to only grow from here. 2 NFT projects have remained in CryptoSlam's top 10 NFT collection rankings for weeks, as D-Market with their Counter-Strike Go skins and Gods Unchained with their new mobile game, they ride the hype of gaming NFTs. And this, my friends, this is why so many people think that gaming will lead to NFT mass adoption. You have studios like Square Enix and Ubisoft and Epic Games, 3 major game studios that are all betting big on blockchain, and they've all dipped their toes into NFTs. Some final thoughts to leave you with. There's been discussion in the NFT space about NFT collections prices falling across the board, but the number of holders has actually been going up. The Forkast 500 NFT index has reliably shown this exact price action, showing that the NFT market has lost nearly 18% of its value this year alone, almost 90% of its total value since January 2022. A project like the Doodles, which once had a 25 ETH floor price, it now costs just 2 ETH to buy into. And a legendary NFT trader named Pranksy recently sold 25 of his doodles, though he insists it was a move to acquire ETH and it's not a comment on the project itself. And it just speaks to how traders trade. Out with the old, in with the new. Collectors, they value hot trends and the cool new shiny thing over yesterday's collectible. That's the NFT news this week. Angie, back to you.
Fantastic job, Yehudah, as usual. Thank you so much for breaking it all down in the marketplace of NFTs for us. Really appreciate it. All right, so from Hong Kong to China and everything in between and NFTs, you know, it's been a really interesting ride this week on Forkast IQ, and I hope that you got a lot of insights. That's the goal. That's a wrap on this week's show. Thanks for tuning in. And remember, we would love for you to like and subscribe to this video if you're watching online with us, and it helps us serve you better. Or stay tuned right here on this channel if you are watching from the comfort of your own home. I'm Forkast Editor-in-Chief and your host, Angie Lau. Join us again this time next week as we bring you the latest from the world of Web3 and why it all matters. Forkast IQ. Get intelligent in Web3.